The rand should be or 7 to the dollar. Why South Africa's currency is so undervalued. South African Reserve Bank, SCRB, Governor Lesetja Kganyago has made a bold statement. According to economic fundamentals, the rand should be trading at around R7 to the US dollar, not the current levels near R18. Speaking at the Kalima Motlanthe Foundation's Drakensberg Inclusive Growth Forum, Kganyago described the local currency as incredibly undervalued, citing research and purchasing power parity (PPP) data that show the rand's real value is much stronger than what global markets reflect. Analyses such as the Big Mac Index and the World Bank's PPP conversion factors indicate that the rand's fair value sits closer to R7.40 per dollar, suggesting it is undervalued by more than 50%. Kganyago explained that the weakness of the rand is not due to natural market forces alone, but rather the result of structural economic issues and a loss of investor confidence. He emphasized that when a country's economy is strong and stable, investors gain confidence, leading to currency appreciation. However, factors such as state capture, rising government debt, and South Africa's junk credit rating have shaken confidence in the economy, causing the rand to depreciate even as inflation remains moderate. This disconnect between economic fundamentals and market perception has meant that the usual pattern, where a weaker currency boosts exports and stimulates growth, has not played out in South Africa. The governor also discussed South Africa's free-floating exchange rate, which has been in place for nearly 3 decades. He highlighted the importance of maintaining price stability and aligning the country's inflation targets with those of major trading partners. The SCRB currently targets inflation between 3% and 6%, with a midpoint of 4.5%, but is now moving closer to a 3% goal. Kganyago warned that if South Africa's inflation runs higher than its global peers, the country risks losing competitiveness, which could further weaken the rand and raise the cost of imports. While the claim that the rand should be R7 to the dollar might sound overly optimistic, Kganyago clarified that this figure is a theoretical benchmark, not an immediate forecast. The reality is that currency strength is determined not just by purchasing power, but also by investor trust, political stability, fiscal discipline, and economic reform. For South Africa, improving governance, reducing public debt, and restoring confidence in state institutions could help the rand move closer to its true value. Ultimately, the discussion serves as a wake-up call. The rand's weakness is not inevitable. With sound economic management and renewed investor confidence, South Africa could reclaim a stronger currency that reflects its real economic potential. But until then, the dream of AR7 to the dollar exchange rate will remain an aspirational reminder of what could be.